Hello, everyone. This is Andrew Berman from NMP. Thank you for joining us for another NMP webinar. Hope you're having an amazing Thursday. Hope your May's good. Hope you're having a great May, actually. There's tons of opportunities out there. I know a lot of people are focused on the missing opportunities that we saw over the last 2 years, but there are people out there that are killing it. There are people out there that are taking opportunities that just weren't there previously, and which is like perfect for us, with our guest today. So today we're going to be doing mastering cash out refis to drive volume in today's mortgage market. So with us today, we have the legendary Josh Friend over at Accelerate. Josh, thank you for joining us. I'm going to enable it so you can become the presenter, so you can share your awesomeness. But listen, before we get started, I want to make sure that everyone does what I'm doing literally right now, turning your phone off, turning it to silent. If you have Encompass open, we got Calyx open, whatever's open, any browser tabs, shut it all down. If actually the way we work here, like we're going to be in and out of inside of an hour. Josh is a former top originator, a marketing expert. He's taken all of his systems that he's learned and that's worked really, really well for him, and all the things that he's learned from his clients, and is giving them to you and sharing a lot of these ideas. Josh, how you doing today?
No, I'm doing fantastic. I thank you for having me on. Let me make sure I'm sharing the right screen. Like you said, there's lots of opportunity, to kind of give you an idea. I got in the business in 1999. I was 22 as a loan officer. And within 30 days of me coming on the sales floor, our rates went up 1.5%. And here I was all excited about what can I'm about to make money. People were making money and I'm going to do it. And then all of a sudden the phone stopped ringing, and there was 150 people at IndyMac when I was working there. And they,
before you go any further, so when 1.5%, what was it and what did it go to?
It went from about 6.25 to about 7.75.
Okay, so just anyone who's bitching about rates, remember that. Okay, so then continue.
I remember selling 7.5% with 3 points. So and people lining up all the way down, because it's really, and this is what we want to talk about, is it's the benefit of a loan, it's cash flow and so forth to consumers, and it's understanding how to do that. So I got on the sales floor knowing, the phones weren't ringing, and IndyMac Bank had a huge portfolio, and they allowed us to pull down 10 people's names a day. And if we pulled those 10 names down a day, we could call current customers and try to sell them a new loan. I was on a team of 10 people, and everyone on my team said, there's no way I'm going to do that. So I said, can I have your 10? Can I have your 10? So I had 100 every day. And so all of a sudden, everyone's like getting other jobs, or I'm going to be an insurance agent, I'm going to do this. And I'm still making $15,000, $20,000 a month, thinking, why aren't you guys doing this? It's more work, but there's opportunity, because even in the down market like this year, it's going to be $2.5 trillion. So if you're in this business in 2010 to 2019, we never got above 1.7 billion. So it's still 800 billion than our biggest years, basically, over the past decade. So it's still a massive market. So I know there's lots of opportunity out there. Again, I was a loan officer for a handful of years. In 2003, I started my first mortgage company. By 2004, I had over 100 employees. And I think one of the things that we really did a lot is we trained people how to sell. What it was to sell, and we sold a lot of cash out. I can tell you through the 23 years career. Most recently, I owned part of People's Bank. We originated about $3 billion a year between retail and consumer direct. And I've trained thousands of loan officers. So this is something that I actually really like to do. I really enjoy doing this. So I'm glad there's actually a lot of people here. And this is something that I think we've done a lot. And as you know, it's very timely right now, right? If you go to our YouTube channel, you'll see probably this similar training 3 years ago that we were doing as well. So it's something we've done quite a while. So here, let me just start with this, right? What I like to tell people is, if you really want to sell cash out, you need to know the truth, understand the numbers yourself as a loan officer first. if you don't understand the math of it and you don't understand how it works and you don't believe in it, you can never sell someone a loan if you don't understand what's going on, right? It's hard to sell, like say, self-conviction. You only want to sell loans that help people, right? There's enough good business, or you can really help people out there, that you don't have to try to convince someone to take a loan that doesn't help them, right? So you first have to understand the numbers. And there's some myths. Usually what you're looking at when someone's taking cash out, there's a couple things they're taking cash out for. It's paying off credit card debt, which is a huge one, or it's remodeling the house, or it's some other expense, a wedding, send their kid to college, something. I mean, I've had everything. I did a loan for someone that needed to take money out for bail money for their kid who had been arrested, and they needed $50,000 to make bail. So I mean, it's yeah, right. But part of it is understand the truth of the numbers and what that works. And what that is there's no cheaper money than there is of a mortgage to your house. That's the cheapest money that's out there. You can't get it on personal loans are going to be higher, credit cards are going to be higher, everything else is more expensive. And when I was selling loans, people would say, "Oh, Josh, I'm like, look, you have, take an application, you have $25,000 in credit card debt. We should pay that off." No, I don't want to pay that off. I don't want to finance that over 30 years. I'm going to pay it off, and they start telling me all these things. And now, as you probably know, in the credit card world, 10, 15 years ago, it's now by law, they have to disclose on their statement. It tells you what you're going to pay it off. So the average credit card takes like 27 to 35 years to be paid off at the current minimum payment, which is somewhere between 2 and 3%. So when someone says, "I got $25,000 in credit card debt," they're probably paying about $750 a month for that. That's a pretty good, accurate number. It's about 3% of the balance is what you're required to pay. And it probably says on their statement, "Oh, if you pay this amount, your credit card will be paid off in 29.5 years, 31 years, depending on what the rate is." So you have to mentally understand, no, these people are already financing that for 30 years, right? And then you have to they go, "Well, but I'm going to pay it off early. I'm going to pay extra." Then you have to understand, great, you can pay off the mortgage extra and early as well. And so if you understand really how you're helping someone and the math of it and the truth behind it, that's, I think, the first step, right? Because when we would teach loan officers to sell cash out, sometimes they wouldn't understand, I don't know, this doesn't help them. I'm like, let's go through the numbers. And you find out, no, it really does help them, but you just don't understand. They don't want to finance their credit cards for 30 years. And you're like, well, I get that they don't want to do that, but they already are. And I think as a loan officer, right, it's our job to consult people on the facts as best as we can and help them.
Yeah.
Right.
Well, something, and I think actually a loan originator, a loan originator's job description is not necessarily that, doesn't include that. But the mortgage advisors and those who are going to succeed in this business are going to be the ones that do this. So while you don't have to do that, you can just actually wait for people to call you up saying with opportunities, say, "Hey, I'm looking to refi," wait till rates actually go into a better place, or looking for purchase opportunities. But I think actually the big opportunity for us to add value is actually to be more of a consultative approach and look for opportunities where they might not know that there's opportunities.
That's right. You're absolutely right. And I don't like the term loan officer. And the reason is because, listen, you're not a loan officer, because if it was up to me, you would, I was like, listen, I would give you 1% and 100% finance, and I would require no documents, and you could sign tomorrow if it's up to me, if I'm the loan officer making the rules on this loan.
Yeah.
But we're not. We're the consultants, we're the advisors, we're the ones that help them with customer service, because we're selling a commodity. So, people would call, "Well, I don't want to send my tax returns. I'm going to go with another lender because, I don't need to do a tax returns." They complain. Well, I just want to explain something to you. The next lender you call is going to require the exact same thing. We're not requiring anything different. This is what's required by Fannie Mae, Freddie Mac, FHA, VA. These are underlying guidelines. Everyone's going to require this from you. So that, understanding what's needed. I'm actually going through a loan right now, and I'm closing on a new house next week. And my loan officer that I've used has been great. She knows all the programs. She knew exactly what the underwriter is going to want before it got turned in, was able to advise me on, "Hey, listen, let's put, here's everything we need to have so we can give it to the underwriter, it goes right through." And that was, extremely helpful. So but they know the guidelines, they know everything, so they can advise me on that. So you have to be the advisor. I mean, listen, I have a financial planner, I have a CPA. My loan officer knows more about my financial situation than either one of those do, because they're looking at my credit report, they're looking at my debt to income ratio. No one else does that. My CPA doesn't look at my credit to income ratio and what my car payment is versus a credit card. They don't look at that. Either does my financial planner. They just look at, hey, do you have money that I can get you to go buy a new product with, and buy some, go invest more. They're not actually, because they don't have that viewpoint. A loan officer, you have a viewpoint that's very unique.
Yeah.
You're talking to people in a very intimate thing about their life. You're seeing all their finances as it relates to their home.
Yeah, but listen, your CPA only cares about what happened in this last year,
Yeah.
and they're really just looking for opportunities to be able to save you money on taxes in most cases and help you maybe plan for the future. But they're not asking all the questions that you're going to ask, as an originator. You are getting actually that true 360-degree view of financial picture.
Yeah, I mean, no one else does that. It's if you really think about it. So you're in a unique position to really give great advice, right? I always have a slogan is don't let a customer be wrong. And what that means is if they have a misconception, you don't let them just be wrong with it. I'll give you an example. I was a loan officer. I had a borrower who called me, and it was an IndyMac bank, and they owned like a fishing fleet company, so were reduced stock. They could do a stated income loan with their tax or with their bank statements showing that they put money in, whatever, and kind of like non-QM now. And the rate hit was a quarter hit on the rate from the conforming rate, and the lady was like, "You're my current lender. I've been paying you. I think her rate was like 8.5%. I was taking her like 7%. You're my 7.25. You're my current lender. I've been paying to you guys on time for 5 years. Why should I have to?" And she was just really just adamant that she didn't think it was fair. I go, "But ma'am, anywhere else you call, it's going to be the same thing. They're going to tell you you're going to, And so she called someone else. They told her the same thing. And I was talking to Josh, out of principle, I'm not going to do that. I'm not going to. So I go, so hold on a second. Well, actually, I said, I got to be honest with you. I would have recommended everyone. I go, that's one of the stupidest things I've heard today. And she got really, I'm old enough to be your mother. And I said, and my response was, and if my mother, she goes, I'm old enough to be your mother. And I said, well, if my mother was on the phone, I'd tell her the exact same thing. I don't think you're listening to me. You're saving $750 a month. You're talking about, $9,000 a year. And you're saying over principal, you want to keep paying us $9,000 extra more than you need to? Let's really think about that, right? It stopped her. Lo and behold, she did the loan, sent me a thank you card. They bought a new boat, sent me a picture. Hey, this is what we bought, a new boat. And, it was, but that's the idea of don't let your customer be wrong. Yeah. I could have let her sit there and think about principal all day long. But, well, out of principal, that sounds really, you're going to lose $9,000 a year out of principal. That sounds pretty dumb. Like that doesn't make any sense, right?
That's great. I love that. Yeah, it's listen. Yeah, and you're 100% right. I mean, listening. You could actually have the idea that I can chalk that up to a no and go, go on to the next one. But something, finding a way. And I don't know if you need to, if hopefully you have enough actually, kahunas to be able to actually say it like Josh did, but you have to, you're taking this responsibility. Like Josh is talking about, you're looking at more things than any other consultant in that person's life. You have an obligation to do that. And that little thing right there will make sure actually that you're going to get referrals, that make sure that whenever future opportunities to get the one of 13 transactions people have over life, that you're going to get that transaction.
That's right. Yeah, no, that's absolutely right. We're in a unique position. So first, as a loan officer, understand the numbers. You need to know, educate yourself. Know guidelines, know the numbers, know how math works. You really, get really handy with your calculator. Right? You really need to know these things so you can really advise people. So the other thing I always tell people is, when you're talking to the customer, we've kind of covered this, but is you really need to set yourself up for success. And it's how do you start the conversation with somebody, right? If someone calls and says, hey, what's your rate? Well, the truth is, I can't tell you my rate because I don't know what kind of loan you want. Do you want a 15-year? Do you want a 30 years? Is this a jumbo? Is this a $100,000 loan? Is it a $250,000 loan? Is it 70% LTV? Is it 85% LTV? Is your FICO 640? Is it 780? So there's all these variables that you really don't. So it's not giving your consumer a good service by just saying, oh, hi, our rate's 5% today. Do you want to know? Okay, great, thanks, bye. What you really want to do is listen. We have many programs. You know, I have a lot of different programs, and there's a lot of different programs in the market right now between first mortgages, all these HELOCs, all these new things are coming out that we could probably help you. What I want to do is gather some basic information from you first so that I can tell you exactly how I can help you. So now, how long have you lived in the home? Where do you work? And get enough so you can run credit and actually come back and say what you qualify for. So you want, and that gives you more opportunities. So because if you stop at the, oh, you're at 3% and my rate's 5%, okay, bye. You may not realize they have $45,000 in credit card debt.
Yeah.
And they may not tell you that. And they may have the misconception of, why would I pay that off with my mortgage? It never makes any sense. So what you want to do is start the conversation, and actually you want to get an application, right? So step one, you know, I think this is for loan officers, you need to really think about this, is goal one is not to fund a loan when you first talk to the customer. Goal one is to take an application.
So, hey, Josh, let me ask you a question. When someone says, but like, you know, when they put up, say, what's your rate, and they focus on that, what do you think that they're really saying? What is
Well,
that real?
they're trying to see, can you save them money? Right?
Yeah.
I mean, it's, what's your rate? It's like, hey, you know, I got a rates like this, so if it's lower, then it can save me money. But rates are just rates. What you're talking about is payments, and that's what we're going to get into. They're just trying to understand, oh, can you save? Oh, you're at a 5. No, you can't save me money. All right, goodbye. So they're trying to understand, can you save me money? And the answer is, you don't know until you look at their full picture. You don't know what you can save them. You know, they may have mortgage insurance. They may have there's all different variables you may not know. You want to take the application so you have the most at bats, right?
Yeah.
In a market like this, you can't afford to leave opportunities on the table. You have to try to take advantage of every opportunity. Last year, 2 years ago, you could like be horrible at customer service and your phones would keep ringing. You still have more loans you can shake a stick at because there's more loans out there than people to do them. Now it's changed.
Yeah.
You have to do this, right? So set yourself up for success. Start the conversation so you can get that application, so you can then break out and tell them, you know, how this works, and you know what they can do. So you want to really review the numbers. And I always tell, you know, for you, get your, you know, loan offer, you should have a pen and paper, taking notes on numbers. You should tell the consumer, and I often do this, listen, after I take the application, I go through it, I'm going to break out the numbers. Say, listen, why don't you grab a pencil and a pad of paper and a calculator if you have it, because I want to do this with you. Because what you're trying to do is, let's say you're taking someone from a 3% to a 5% interest rate, right? Or 5.5% interest rate. What you're trying to do is let them come to the same conclusion that you do based off of the numbers. Does this make sense? Yes or no? So the numbers will tell us. So get your pen and paper. Let's figure this out. Let's break things out. Like, let's just lay something down. Here's an example of someone who's got a current mortgage, original balance of 223% interest rate, credit card debt's about $26,000. Their total loan amount's $240,000. A new rate was 5.5%. New loan amount's $245,000. So what you're saying is, all right, so sir, ma'am, you know, Gina, Tom, so right now you're currently paying $928 a month in your mortgage payment. Is that right? Yeah, okay. So it's right. So right, $928. All right. So now your $26,000 in credit card debt, you're paying $780 a month right now, right? Correct. Yeah. And as we've discussed, that's going to take you 30 years to pay it off of that payment. You realize, yeah, great. So currently you're obligated to $1,708 a month in payments between credit cards. That's what you're going to pay. You're not going to skip either one. You're going to pay them both. That's what you're paying. Yeah. Okay, great. Now I understand the interest rate's going up 2.5%. But your over total debt interest rate is changing because you're paying 15%, 20% compounded daily, not simple interest, but compounded interest on credit cards. What that means is day one, you owe $1, day two, you owe $1.10, day three, you owe based off of $1.10. You're paying interest on interest during the month. It's extremely expensive, right? So so that's what you're paying, $1,708. Your new loan would be $1,391. We're going to save you $317 a month. That's a reduction of $317 a month. Now, what I like to say is this. It's not that you just save $317 a month. This is kind of where you really need to break it down for the consumer and start doing the math with them so they can grab onto it. It's not that you save $317 a month. It's not that you save $45,000 in interest. Because if you look at, you could look at an interest calculator, and it's that you save $317 a month. That's $3,800 in the first year. It's $19,000 in the first 5 years. Or you're paying $1,708 right now, right? Yeah. Keep paying that to the new mortgage. And let me tell you what's going to happen. You're going to pay your mortgage off in 19 years and 6 months. It's going to save you 10 years, 4 months, which, let's write this down. So 10 years times 12 is 120 plus four payments. Do the math with them, because if you just go through the numbers and tell people numbers, that you don't know if they're understanding you or not. So I like to do the math, do the simple math with them. So does that sound right? So you're going to save you 124 payments. Great. Now get your calculator out. So times 124. And what do we say the total payments are? 1,708. Okay. 124 times 1,708. How much does that? Oh, that saves you $211,792 in payments. Holy cow. That's right.
And have them do the math. They're with the calculator. That's just got.
They get excited. You're not selling them. They're like, holy cow, that's a lot of money. Like, wow, wait, let me go through this. And okay, let's, and you may have to explain it 2 or 3 times, right? Harvard did a study that said the average gifted student takes 5 times of hearing something before they understand it. So if your consumer is a Harvard gifted student, you got to tell them it 5 times before they understand it. So explain it to, right? Explain it to them again. Have them take out the pad of paper, because if they do the math and it's not that big of a number, you're like, oh yeah, you're right. We're not saving you anything. So, there's nothing we can do for you. You're in a great position. If you ever need help in the future, if you have any family or friends that could use a refinance or are buying a house. Now, I got a ton of business that way. Because if you, even if I don't buy a loan from you, but you walk me through and you go, oh, this person really knew what they're talking about. They really could understand and explain to me what my options were, how I could save money. I couldn't use them right now, but my mom, my brother's trying to get a loan. Hey, call my person, because they seem like really honest. They told me that I shouldn't get a loan right now. They did all the math for me. And that's how you earn business. Write it down, take the pad of paper out, have them do this in front of them. So what I would say is this: here's what you got. You can stay what you're doing now, and in 30 years or 29 years, you have your home paid off and your credit cards paid off. Or you can do this loan, and in 30 years, you have your home paid off plus $211,792. But let's just be honest with ourselves. If you're putting $1,708 a month away for yourself, you start writing yourself that check every month, you're probably making interest on that money, aren't you? What are you making? 5% interest, 4%, whatever. You do the math, you can show them, hey, now you're talking about, that's $350,000. So in 30 years, you can have your house paid off, or you can have your house paid off and $350,000. What sounds good to you? Like, that's the kind of conversation you want to go through. And the point is, you have to break down the math for them. And I would say you want to repeat the benefit at least 3 times. So when I train loan officers, you need to find three different benefits, and you need to cover those 3 different benefits at least 3 times on each call. You're talking about 9 benefits you have to pay. It's tax deductible, paying off simple interest. You know those things, because you want to keep repeating them to the consumer so they understand it. They may not understand it off the first step, right? So, and then someone says oh, I don't think that makes any sense, or I need to go talk to someone. Like, hold on, I totally get it. I just want to make sure you understand the numbers again. So let's do the math with you again, right? Let's go through this again. Let's walk through the numbers. I like to say this, Andrew, I think this is, I've done a complete training on this in the past with loan officers. There's only 3 reasons why a consumer says no to your loan. Assuming that you can help them. If you can't help them, then but the people you can help, 3 reasons. Number 1, I don't know you, I don't trust you.
Yeah.
Number 2, I don't understand the benefit. You're telling me that I'm going from a 3% to 5.5%, but I don't think that makes sense to me. Or number 3, I think I can get a better deal elsewhere. My neighbor's a loan officer, my broker. What I like to do is, you want to focus on, especially selling the cash out, which one of those 3 are they saying no to you for? Is it because they don't trust you? Is it because they can get a better deal elsewhere? Or they don't understand the benefit? What I have found is, if you go over the benefit over and over again, what happens is you increase their trust level. They will trust you more. Then they'll start understanding the benefit. Then all of a sudden they feel like, this is great service. I don't care if I think I can save $100 on my closing costs, because I'm paying for service, and this is great. I want to go forward with this loan. So identify why someone doesn't want to buy, and make sure you know the math, and drive them through it.
And so to me, actually, listen, when you do this, you're never going to get asked rate again. I'm assuming actually, whenever it came time, actually, and you called up a borrower for a second time, for a second loan, second opportunity, no one's asking your rate.
No,
Yeah.
no, it's payment. Because I mean, let's be really clear. Owning a house is like leasing a car. What's my down? What's my monthly payment to drive this car? What's my down? What's my monthly payment to live in this home? That's how people are buying homes. That's why home prices right now, I think, are going to have a hard time going up because interest rates are up. So I can't afford that same house. It's more expensive, and that's what we're really doing. Is it's by buying. Consumers buy off credit and capacity. That's what it is. What's their capacity to pay on a monthly basis so they can live their lives? And so once you understand that that's what we're talking about, then it's much easier to sell to a consumer a loan because you're structuring their life. Hey, take that $1,700 a month, send your kid to private school, send your kid to college, whatever, maybe something else that you're going to do with that money in 19 years. But you have options and you know how to explain it to the consumers.
So, and just two things. First off, we have just had a question that came in. You want to hold off questions to the end, or you want to take them as they're coming in?
You can give me a question.
Okay, fantastic. We also got some polls too. I don't know if you want to you have a launch them later, but here's the first question. Is Michael asked. So, and I don't know if this is something actually that you can really answer, because obviously this is something when was definitely a different scenario when you were originating, since actually this kind of got addressed during the Trump administration. But what are the tax deductible rules for cash out? That might be something that might not be a conversation for here, but I figured I'd throw that out there. But
I would say you need to check with your CPA, but I think the new rules are up to $750,000 for a primary residence is what you can actually deduct for interest. So over 750 of a mortgage amount over 750, you can't deduct it for interest. Now, I don't know if the cash out can be included in that or not. So again, I check with your CPA on that side of it.
Yeah, fantastic.
But Trump did lower it. It was $1 million, and then it got lowered to 750 under the Trump administration. That's right.
And then this is the next question. Someone's asking if they could do a cash out. Why do a cash out when they could do a HELOC? And it's just, let's listen to these. It's a great question. I think it's just
the math.
Getting the conversation started. Yeah, it's this is.
Yeah. Okay. Well, so here's your choice. We do this. Your payments here. The new mortgage, first mortgage, it's $1,300. If we do this, we pay off your credit card debt, your HELOC, any new payments. This. So you just, this saves you more. Yeah, the HELOC does make more sense. Or, the HELOC only saves you half as much, so it doesn't make as much sense. Again, it's, what I always tell your loan officer, you want the consumer to say no to your product or structure of your product, not you as a loan officer, if they're going to buy. Like, you know what, Josh? I don't know if I want to do that. It doesn't make sense. But what that HELOC was really what I could get a HELOC to remodel the house. Well, here's the options for your HELOC. Here's how much $50,000 is going to cost you in a HELOC. Here's how much it's going to cost you in the mortgage. What makes sense to you? But then again, it's just the math. Hey, you're right. It does make more sense to take a HELOC. You shouldn't touch that first. Or, well, doing the math, it does make sense. You should touch that first, and you should get a new loan, and that will save you money.
Yeah, and so just I'm going to address, there's a bunch of questions. Are people asking very specific like product questions, and these are things like great questions, and they're conversations that you can be having with your borrowers. The idea is like you have to get past the rate and be able to actually get to that point to have these conversations. Also, we got Ava in the audience just asked, is the replay available? And yeah, so most of our webinars, if you attend, we will send you a replay, so you can actually focus on ingesting this information and know because you attended, you'll get a copy later on, so you can actually take notes later on and go back. But yeah, this is I know for me, the way I retain information a lot of times, I have to take notes while I'm doing this, so I'm going through it the first time. But we've got this is a good one. Never quote a rate without a feature. Never quote a feature without a benefit. Thank you, Dave. I appreciate that.
That's right. People balk on price when they don't understand value. So you have to show the value, and the rest is, I would do loans, and some people wouldn't even ask what their first mortgage rate was going to be, because it really didn't matter. What they understood was I'm saving $500 a month or $450, and that's what they care about. Like that was, the rate became secondary, because really what we're talking about is let's just think about this for a second. Someone doesn't refinance from 5% to 4% because 4 just is a better looking number. right?
Yeah.
They do it because it means a financial difference. You know, when I first got in the mortgage industry, consumers would be like, well, I was told if I don't lower my rate at least by 1% or at least by 2%, it doesn't make any sense. I'd be like, whoa, 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 whoa. That's really bad information, because you could have a $100,000 loan amount. I can lower it by 1%, and it doesn't make any sense. You could have a $750,000 loan amount. I can lower it by 0.3%, and it makes a lot of sense. Again, it's the numbers, right? You have to know the numbers, do the math with the consumers, and that's all you know. And those people that have benefit, make sure they understand the benefit. Sell with conviction. I always say that, right? Only sell good loans that you know can help people. You need to understand the numbers yourself so you can sell with conviction. You can say, hey, you know what? I know this can help you. And if you know, so I was part of People's Bank, and we had something called the Grandma test, and I absolutely loved it. It was what we called it was, this is how. So People's Bank, we had banks in Kansas, New Mexico, Colorado, Missouri, and we had some of the highest levels of customer satisfaction of any bank in America. People absolutely loved us, and it was very simple. The Grandma test, which is this: how would you want your well-revered grandmother to be treated? So it's Friday afternoon. I get some good news, bad news. I want to go home. But if it's my grandma, would I want my grandma to be called to let her know that the appraisal came in? How would I treat someone I really care about? So that's kind of, you know, you can envelop that as, if you're trying to treat this person like someone you care about, you envision them as someone you care about, you only want to do things that are good for them. And if you can sell with conviction, you be honest about it. If you can help them, that sincerity usually comes out, and they may call you 6 months later because they're buying a house. They may refer you some business, right? Yeah. So, we're in a great position in this industry to really help people. We're in a unique position to see their financial situation. So as a loan officer, it really makes sense for everyone to really understand the numbers themselves so they can be the experts they need to be. You know, I have one last slide, and it was just a brief one to look at, which is go out there and find a tool where you can actually, show extra monthly payments. And what I used to do, I would go to Bloomberg and I would tell my consumer, hey, go on Bloomberg.com, go to the mortgage calculator and type in these numbers, and I'd have them type in to show how they could pay off their mortgage early. So instead of me saying you saved 19 years on your mortgage, they'd go, oh, I'm saving 19 years. It makes it even more real for them. So get something that actually can really show them the numbers, because people don't understand it. If I say to you, and here I am, oh, your mortgage, you're going to save me $63,000 in interest in my mortgage. I really don't know what that means. I don't. Does that mean I'm paying $20 less every month? Well, I don't. What does that mean exactly? What does $63,000 in interest on my mortgage mean to me?
Tomorrow, when is this $63,000 going to magically appear into my bank
account?
account?
What do I see? Is it the end? Is it just because I'm every month I got 20 extra bucks in the bank? Where is that number? And it's truth. It's a hypothetical number because it's interest and it's not. So you need to really understand, what does it mean to me personally? Well, okay, so I get paid this much money every month. How much money am I going to have left over after I make my payments? That's what I want to know, right? I want to know if I'm saving money as well, but that's what we're really talking about here. So use some tools that you can actually walk people through this and tell them to go online. Hey, go online. Here's the website. Or there's plenty of system companies out there like Mortgage Coach that have, tools like this that will let you present these options to your consumers. So that, that's an option. It's very worth it, right? Be the expert, help consumers, right? Do the right thing, look for opportunities, and then you need to tell yourself there's going to be $2.5 trillion in business this year. I can get my 5 million of it, 10, whatever the number, whatever your goal is, right? There's 2.5 trillion. When I was at IndyMac Bank, and there was 150 loan officers on the floor, and it went from, they were turning in, 200 loans a day to turning in like 30 loans a day. What I said to myself was, ooh, 30 loans? That means there's 30 loans. There's 30 opportunities a day in this office. I'm going to at least get one of them. So that's, I think that's, and if you guys want to find out more, obviously reach out to us at accelerate.com. If you want to find out about our products, how we can help your loan officers, a lot of our tools. So I originally built the software for myself to help me manage my loan officers, help them manage their days, help them work with their referral partners. So if you want to find out, more about our platform, please reach out to us. One of our sales staff would love to talk to you, show you our system. And, this Accelerate is really the outcropping of my 23 years in the industry, and, the tools and techniques and processes and workflows built into the system. So Andrew, I really appreciate it. If there's any other questions or anything you want to cover.
Yeah. So I got a couple of questions, and I'm curious. I want to find out from the audience, what percentage of people are currently doing cash out refis? So if you could actually please just let us know. I just want to know, what kind of it, and I have some questions for you. So one of the things that I know that's really awesome about Incelerate is you guys are very open to connecting to, some of the greatest technologies in our industry, and it's just like you guys have a very open relationship to be able to make sure that you're working with other providers. And someone asked a question here that you might be able to actually to shed a little light on here. We're gonna leave this poll open for another 5 seconds. 5, 4, 3, 2, 1. All right. So before I share the results, do you want to take a guess on what percentage of the room, where is it? So we got less than 25%, 25 to 50%, 51 to 75%, or over 75%. What do you think is the winner? What do you think actually is the winner from these ranges?
50 to 75%.
Okay, yeah, that's what I would have hoped, but no. Look at this, less than 25%. You know what that means? That means actually there's a lot of people on this call that are going to actually be finding a lot of opportunities in their pipeline. I mean, this is great. Like I'm excited. I'm if it was 51 to 1 to 75%, it wouldn't be actually as much of an opportunity. But right now, you are potentially changing people's pipeline and at least production numbers by just implementing some of these things here.
Yeah, no, that's awesome. That means there's opportunity. I love it when you see stuff like that, because that means there's opportunity, and opportunity is what people want to do. And also, if you're a lender and you realize you're only selling 25% cash out, go, oh, I could be selling more. That means you could do better.
And can you do me a favor? Can you put back up your contact information on there? I got I got some other questions. If you got a few more minutes for me.
Yeah. Yes. Let's do. Hold on. Let me put this back up. Apologize. Share screen. Where is that? Show screen.
Okay, we're good. I see your screen now. We got your website on there. So all right. So I want to actually so right here and I know we've kind of talked about this, but I just want to actually talk about this mentality. Someone said, how do we get people off their low first? So here we actually have people, if the 3%, 2%, how do we get them off of actually those, off of this? So can you give Cyrus and the rest of the audience here some tips or some things that they could say, to help them get away from that mindset that they're losing this, the 3 or 2%.
I think one of the ways is you as a leader have to be showing the way. So think about, like, if you're charging the hill and it's a tough hill and you're telling your people, hey, just go run up there, and you're sitting behind the hill on a chair eating lunch while everyone's running up the hill getting shot at, they're not going to follow you. You want to get them off the loafers, you get on the phone. Hey, let me second voice that deal for you. Let me talk to your customer for you. Let me show you how to do this. When I was a lender and times got slow, I would even say, hey, team, I want to second voice the deal today. Hey, all my sales managers would say, let's second voice the deal for you. Let us show you. We're going to take action and activity, and be the first in, last out. If you're the leader, if you want to start showing people hope and get them off their loafers, you need to be the one that's actually driving. I have a good friend of mine, has a mortgage company, and he's through the years has kind of been one of those people that doesn't always come to the office a whole lot. And also when times are tougher, I'm like, listen, you got to be in the office all the time, because otherwise your people aren't going to be in the office all the time. Like, you need to show that you're the only one that you care the most, have the most to lose or gain. You need to be the one showing the way. That's what it is. People are going to follow their leaders.
Fantastic. All right. So listen, going on that. So obviously the times are tough, and you have actually we're looking for opportunities. So beyond referrals, what's another lead source to kind of hit your numbers? This comes in from Scott.
So besides referrals, I mean, your past customer, your past database. I mean, the amount of people that you've taken an application from and it didn't move forward, or all there's an immense amount of opportunity that people you've already spoken to. So having systems, like Accelerate, where you can actually go back and market to past customers, past applications through either it's email, text, social media, direct mail, phone calls. You want to start going back after your data. Your biggest opportunity right now to make money next month is in your current database that's in front of you. That's where the value is right now, is in your database and making sure you're managing it correctly and you're getting all the business out of it.
Yeah, that makes sense. So, all right, so next question, this is kind of more related to your knowledge of other systems out there that, many of them, work with Accelerate. So prospects ask for a non-owner occupied condo refi as 3.75 rate on adjustable margin. Basically, I'm going to shortcut to the end of this. They want to actually know software that's out there to compare different options, using completely different scenarios. Any suggestions that you might have? Of course, bonus if it integrates with Accelerate.
Yeah, so it does integrate with Accelerate, but I mean, I think the market leader out there for this is Mortgage Coach.
Yeah.
Right. A lot of people, Dave Savage is there, and now they've merged with Sales Boomerang, which is another great software that we see a lot of lenders use to monitor their database and make sure they're getting the most out of it. So, I think I don't know of any other players out there that like Mortgage Coach, but I think they definitely have been the dominant player in the space.
Yeah, there's no question about it. I mean, listen, the total cost analysis is just a magical tool that wins so many people business. So that is awesome. I appreciate that. Let's see. Hold on for a sec. Oh, this is a good one. I love to. This is someone coming from who is a newer originator. All right, let me just pull up their question. Locking up on me. Give me 1 second here. Okay, there we go. So what would your advice be to a newer originator that doesn't have a large database?
A new originator doesn't have a large database. I would say you probably have a bigger database than you think you have. I'd find out where you're working. Say, hey, do you have any old leads, any old database of people that are no longer here, you're no longer marketing to? I would love to call them and market to them. Right. I think that's there's going to be data around where you're at. And then it's just, buy leads, buy a database, call on people. When I was a loan officer, I was making 200-300 outbound dials every day, trying to get a hold of people that, were on a list somewhere that weren't in my database.
Fantastic. And listen, once you're getting those in, having actually, so the problem is a lot of people, they don't have the proper systems to, once they get those leads, nurturing those leads and taking them from a suspect to a client, you need actually a system like Accelerate to be able to do that. And I mean, if you can, give us the journey of what it's like. So let's say someone's buying a lead, and that lead is not ready to be actually to convert actually into a borrower, and we're bringing them into the Accelerate system.
Yeah.
What does that journey look like?
Yeah, so I think so a lead comes in first. The platform, to give you an idea, it automates communications through email, text messages, ringless voicemail, Facebook posts, Instagram posts, TikTok posts, direct mail. I think that's them. Yeah, I think I hit all the channels. And you're able to, consumer comes in, they raise their hand, thank you email, thank you text, they don't qualify because maybe their FICO score is low. An email comes out, lets them know that, hey, this is why you didn't qualify, your FICO score is low, and it goes into a long-term drip nurture campaign about how to improve your FICO score. And then maybe you're using someone like Sales Boomerang to monitor that FICO score. Once that consumer's FICO score goes to where it needs to be, our system now kicks off a marketing campaign. So maybe it texts the consumer, great news, I can help you now with your loan. We automate Facebook custom audience targeting. So what happens is so that's a really powerful one. So you as a consumer, you as a lender, a consumer comes into your preview, if you will, and you're able to market to them on their Facebook, Instagram, TikTok, whether or not they're your friend, they don't have to follow you. So they have what's called custom audiences where you can put specific people's names to market to. Our system automates that process. So you build the journeys. We also have pre-built journeys. You can build your own, but we did a lot of the heavy lifting over several years and came up with all the journeys, the content, the timing, the strategies. So whether they get the email, and then they get a text, and then later they get a Facebook post, and then they see something on Instagram. We've built all that out so lenders can just roll it out day one on their own, and then you can build your own, adjust it, change it.
That's awesome, man. I mean, listen, if you were going to create a system, to be able to have actually like the perfect system, using actually like one of the big players like a Salesforce out there, this is exactly what people do. I mean, I've heard people actually that were considering Salesforce and went to Accelerate. Keep in mind, like Josh doesn't like to sell Accelerate. Like I'm bringing it up because I've seen actually what companies have done with this. Do you guys sell it on through smaller companies? What's the minimum user size to use Accelerate?
It's 10. So we serve, so 10 users or up is what we tend to serve.
Fantastic. That's awesome, man. Well, that's great, man. So, and there is a lot of other questions. There are product questions. So listen, you and I talked actually last week, and you said actually if people book demos, we were going to give them some kind of incentive.
Yes.
So you still okay with that?
Yes. If you book a demo today, and you can push our website out there on a link just to Accelerate.com. If you go there, book a demo today. We'll buy you lunch. So up to $50, we'll give you a gift card or Grubhub, whatever is easiest for you. Do a demo with us, and let's buy you a nice lunch.
Well, that's freaking awesome. So there we go. That's the people are just they're excited about that. We're getting good feedback. So listen, all right, go to Accelerate.com. Just spend a little time. Actually, you just got to see this system, and we are blessed. Actually, we work with some amazing companies that really actually have the ability to change your production. And I mean, this is just a great time. Like people actually you could be focusing on all the missing business, but I think actually this is the great time actually to focus on re-engineering your tech stack, making use of things that would normally be out of reach. I mean, listen, if you wanted to build what you do, in actually by yourself, I mean, you're talking hundreds of thousands of dollars to actually have just some of the.
Well, I can tell you, we're talking. We have over $10 million to build our platform. So you're talking tens of millions of dollars, and the brain damage it takes is immense, even more than the cost, right? I always tell lenders, you don't want to build technology, you want to go sell loans, right? Because that you want to figure out how to use the technology out there to be as efficient as possible and not try to be a technology person. Or if you want to, which is what I did, I wind up taking Seniorite. I'm a technology person, and the bank sold, and now I just sell Accelerate because this is what I do want to do.
That's awesome, man. Josh, always great to hang out with you. Really, really appreciate it. Everyone, go to Accelerate.com, book a session with them. You got to look at this system. I've seen it myself. It is pretty awesome. So best case scenario, you've increased your volume. You're going to do actually things that only the big companies could do. Worst case scenario, you're getting a free lunch. So that's not bad at all.
Andrew, I appreciate it, and everyone for watching. I'm glad you guys watch. I really love talking about how to help loan officers. So this was very fun for me. Andrew, you there?
Okay, I am sorry about that. My little bit of problems here for some reason, but I was just saying goodbye to everyone. So, Josh, anything you want to say in closing?
No, that's it. Just thanks for the time, and everyone have a great rest of the week.
Fantastic. And thank you for joining us for another NMP webinar. We're really, really excited that you joined us. We have some great webinars next week coming up. We've got a great one on non-QM, but this is a great time. This is a time that you get to re-engineer your business, find ways actually to make minor improvements so you can maintain the volume, hopefully grow, and then be ready when the next boom hits. Josh, thank you as always.
Awesome.
All right. Everyone have a great day.